The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello, welcome to the COB on this Friday afternoon. I'm Nadine Blaney, and surprise, oh God.
Yeah, it's been a while. Good to be with you, Nadine. I've got to say, I'm looking out the window now. If you're in Sydney, it's very bleak out there. A bit bleak on the markets as well.
Yeah, nice segue. It sure is. It really hasn't been a great week for us here in Australia, has it? Last I checked, for the 4 trading days, because of course, holiday Monday, we're down by about 1.7%, and that's even. Like it's even as U.S. markets continue to hit these record highs.
It's a tale of two different markets, isn't it? In fact, on the ASX 200, we've fallen below the 50-day moving average.
Ooh, you're getting technical on us.
Well, you got to watch these things, haven't you?
On that, just to interrupt, I just did a great interview with the team at FX Evolution. I mean, my part wasn't that great. I just prompted them, but he brought 4 charts. So
Thomas Atkinson.
Yeah, Thomas Atkinson.
Really
They're really good and just really clear in the chart. So it was BHP, it was ANZ, it was Capital Health, Ramsay Healthcare, and CSL. There you go. Something you can check out online.
Yeah, watch it on the website. All right, well, which takes us to our 3 themes. Yeah. Friday fizzle. Well, it has been, hasn't it?
It sure has.
I guess you call it for the week, but a bit of fizzle.
Yeah, it was. So it's our exposure to commodities. We had the Aussie dollar. Well, we've got Sean Callow actually from Westpac in just a tick, so stay with us for that. We'll also get his take on the BOJ. Of course, held rates steady as expected, but it looks as if they will start to pull back on their bond buying program.
Yep. All right. And uranium radiates. Look, that was a bit of a stretch, but look, it is the one subsector there that actually has done very well today.
And Boss Energy has said that it started production at one of its facilities in Texas. That actually might be in the news, so I don't want to leave us with nothing to speak of.
In fact, also, I think Paladin's had a broker upgrade as well, that's helped lift the broader market.
Yeah. So the big boys, though, well, BHP, okay, it's flatlining it, but Rio Tinto down by 0.25%, Fortescue as well. Lots of, again, just question marks over Chinese property market, the steel demand there, they've put some carbon restrictions on, and I guess, fundamental demand.
Industrials, in fact, the weakest sector on the market today, led by some of those infrastructure stocks there, Transurban and Co.
Horizon came up in a conversation today I had with Anthony Kavanagh from Chester Asset Management. We touched upon Horizon because the conversation started big picture with demographic shifts, in the likes of India and China. But then we went really deep into CSL. I've cut that bit out, put it on the website so you can have a listen. So 2 things that you can listen, but Horizon he quite likes, because it's the infrastructure behind the materials that we'll be sending to India, which he sees as primarily coal.
And the telcos, a bit of a mixed picture there, and not a lot of movement other than Superloop, which was the outperformer.
Really a standout there. All right, let's not keep you waiting any longer. A big warm welcome to the COB. We've got independent strategist currencies, Sean Callow. Hey, Sean, good afternoon to you. I see you are staying warm and dry here in Sydney. Look, we're at a Friday, which was a really, really big week. Was it the type of volatility that you had expected starting out?
Yeah, well, obviously there was so much to absorb for markets in terms of the Fed in particular. And the middle of the week, I suppose, was the key, as you say, locally getting off to a quiet start with the holiday. But for the US CPI, and to have this US CPI and FOMC on the same day was pretty inconvenient for traders who might want to pace themselves a little bit. And it was referenced by Chair Powell in the press conference that once in a while it happens, and it's not super helpful because they've obviously got quarterly forecasts to produce, and so to have such an important release on the morning of the meeting where everything has to be published by 2 p.m. local time, it was. We had the low CPI and then the slightly more wary FOMC. So huge gyrations had a big impact on the Aussie. The Aussie obviously benefiting greatly from that CPI and outperforming on the week. But a lot to absorb over the course of the week. The employment numbers obviously yesterday.
Yeah, we've obviously got the Aussie up at the moment. Sean, going forward then, what are you looking for that's going to drive those movements in the Aussie? Obviously, we saw that interest rate differential. which may well begin to close at some point between the US and Australia. But obviously also the China story.
Yeah, that's right. So we just saw the chart there. That was obviously just a small snapshot of yesterday's price action, and particularly zooming in on that 11:30 a.m. release of the stronger than expected employment numbers. So good jobs growth, increase in participation, unemployment rate around 4% is still very strong. But we only got that really small rise in the Aussie before it rolled over again. As the Chinese yuan weakened. And the yuan is fairly close to its weakest level since last November, which is probably indicative of just the desire for Chinese investors in particular to get out of there and ship their capital offshore to the extent that the local regulations allow them to, and the lack of foreign inflow, both portfolio but particularly foreign direct investment has been very weak into China. So those concerns linger, and it does make it difficult for the Aussie. Obviously, we've got the updates coming up in the week ahead from the May industrial production and retail sales. Retail sales in particular were very soggy. We're probably for Australia more focused on the industrial production to see if that can lend some support to commodity prices. And obviously we've got an important visitor in Australia at the moment from China, the Premier. So on that side, that's positive in terms of better relations, but big picture, I just think it's that lack of confidence in the China's outlook that really just keeps a lid on Aussie rally. So it just continues to fail around that 67 level.
Yeah, arguably kept a lid on equities this week as well. Now, Sean, we have the RBA next week. In your opinion, as an economist, will that jobs read that really didn't do much for the Aussie dollar, will that do much to change the thinking around the board table next week?
Probably not. We've seen some wild swings in employment in the past few months. It's been very difficult to draw a through line, but I think the basic picture is intact, that the jobs market is still quite resilient at this point. The RBA should probably be expecting that the unemployment rate would remain somewhere around here for the time being, but it's that question of if the economy is barely growing at all. It's certainly was, I think, 0.1% in the first quarter, then how long can it continue to create jobs at a healthy clip? You would think that the RBA would be looking to the second half of the year into next year to slower job creation, and that will help take a little bit of further pressure off, particularly that domestic services-led inflation that's been holding up the overall numbers. So we'll get a decent amount we'll get the statement and the news conference, etc. All those quality questions from the local journalists at the RBA. That should be entertaining so far. It's been a bit of an experience for Michelle Bullock, but what we aren't going to get is quarterly forecasts. So clearly, we want to hear what did they make of that upside surprise on inflation in April. But overall, it's a steady hand, maybe a bit of a tweak in the language, but that's really what the markets would respond to if there's any response.
You weren't laughing at journalists, Australian journalists, surely not Australian business journalists.
There are only a couple of very odd questions every now and then, not the business journalists.
Yeah.
I think the interlopers is what I mean.
Sean, now, of course, we've got a number of central banks. We've got, of course, the BOJ today. As expected, pretty much leaving rates on hold there. Was saying it's going to reduce its pace of bond purchases, which it says to ensure long-term interest rates are more freely formed to the market. What did you make of that, and how's that impacting the yen?
Isn't that a radical idea that bond prices would be formed in the market, free market forces, when they own 50% of all JGBs outstanding? So there was that a little bit of disappointment. There's always chatter beforehand. Are they going to deliver some sort of surprise, rhetorical surprise normally? But so some people, it sounded as though they were hoping there'd be a bit of a clamp down on the bond purchases near term. Instead, they're going to just have meetings with the market participants by the sound of it, which would be nice. So that they're going to get feedback on that. And so at the July meeting, I think it's the very end of July, they said they'll lay out their plan for the next year or two where they will outline the reduction in bond purchases. So it's another step towards normalisation, but today specifically, not that much happened. And so dollar yen pushing that 158 area. There's no real barrier between here and 160, except if US yields, if they soften a little bit further, as they did after US CPI, then that takes a bit of pressure off. But obviously, if they rebound, say US retail sales next week, for instance, that would really add further fuel to what's a very weak yen.
Well, we will see what's to come, but there's never a dull day. We really appreciate you getting us across it all on this Friday, wrapping the week for us and giving us a bit of a preview as well. I hope you have a good one.
Thanks, Nadine. Thanks, Andrew.
Take care.
See you, mate.
Sean Callow there. He's an independent currency strategist and economist.
All right, well, let's get to those top stories of the day. Look, it's pretty thin, but look, this is significant. Telix Pharmaceuticals abandoning its planned US listing on the NASDAQ.
Yeah, we got some information coming from the company. We just got some quotes coming from the CEO saying, look, they just couldn't stomach for existing shareholders, the discounted price that was on offer, saying that there was no problem. Everybody that they spoke with believed in the business, of course, but that they just couldn't stomach that discount. So pulled plans for that IPO. Clearly hasn't done anything too damaging to its share price, so perhaps the market rewarding just, I suppose a bit of caution or discipline when it comes to that. Thea was raising funds, so came back online.
Telix investors is a sort of response, wasn't it?
But considering the losses today, could have been worse. Boss Energy, I said that it started production, I suppose, at one of its places in Texas, and some of the other ones looking good as well.
Yeah, which takes us to our stock of the day, which is mining royalties company Deterra, having pivoted now into lithium. It's made an offer for UK-listed lithium group Trident Royalties for $276 million. And that looks as though that's going to go ahead because Trident have recommended that they take that deal.
That was on the call today, wasn't it?
It's stock of the
Deterra.
day.
It's stock of the day. Okay, great. Well, shall we go there?
Yeah, let's get the view because we did hear from Adam Dawes from Shaw & Partners and Ben Clark from TMS Capital on that move from Deterra.
I think that one of the reasons for the drop today is a lot of people were in this stock for the dividend, and the company's announced that it's going to halve the payout ratio from 100 to 50%, and it hasn't. I don't really understand why, because they can easily fund this transaction, and they haven't given like a time frame, we'll do it for 2 years and then we'll revert back. Yeah. So, I don't know. I mean, it's hard to put a recommendation on because I don't feel like I've got enough information to make a recommendation, but I guess to put it in perspective, it is a fairly small transaction versus the company's size. It looks like an overreaction. I mean, it got down to 390 this morning. It's probably a buy, but I'd want to understand better the outlook for Trident and why they've bought it and what they're paying for it and all that kind of thing.
But overall, I think this one is a really tough one. I'd like to see what the dividend yield is now at where the price is now. Even with a 50% payout ratio, it probably sits up still okay. For that. But yeah, you're looking at some of those assets, gold, copper, silver, lithium, and in America, in Africa and South America, again, that risk profile just jumps ridiculously now because you've got all these these South American assets that, we just don't know what the political situation's like over there as well. So it's going to be a neutral for me. I'd like to see more information about it. You need to digest this. The market's already spoken, but I suspect you're going to see further selling or at least the consolidation of the share price at these levels until the company does come out and give us some more information. So it'll be a hold at the moment for me.
Yep. So it's Deterra, our stock of the day. And Nadine, in fact, I just saw a quote in the fin from an ausbiz regular we have, Andrew Brown from E72. In reference to that, his question was, why? Why do it?
Yeah, right.
He says it's just going to dilute its BHP royalties.
Yeah, they were very, very lukewarm on that one, I thought, knowing them. So let's go. Let's go to the leaders. Start with the good news. So Tabcorp asking the New South Wales government to consider changing wagering laws. It announced today, the government, that it would start a formal process to consider Tabcorp's indicative proposal, so a little bit of momentum there.
Yeah, and Life 360 is a constant move at the moment,
Yeah.
isn't it, as far as that stock is concerned?
Look, IDP Education is on the list. Obviously, it's been really battered and bruised. It had a bit of buying in it today. Deterra, there you go, stock of the day. Other than that, though, again, I hate sort of underselling us and what we do, but there really wasn't a lot of corporate news, big corporate news. Don't forget, we're making our way towards reporting season.
But I think probably what we're seeing movement here is particularly in those commodity prices.
Yeah.
It continues to hit a lot of these stocks, particularly, obviously, those big miners.
Just off that, 5 that we've got on screen right there was ARB. Now, it had a broker downgrade, or actually UBS initiated coverage, but it initiated coverage with a sell and a price target of $34, saying that its US strategy needs to execute well to justify that earnings multiple. So that did take a bite out of ARB.
All right, let's check out what's happening in the small space. Aspire Mining and Demerix.
Experience Co. I wonder if more people arrived here, but up by 6.6%. And it's always interesting to see what's moved to the downside in the small to mid-cap space. Well, Opthea, there you go, in the wake of its cap raise. Otherwise, mostly those in the resources space.
All right, so let's take a look. Tonight, we can look at more data coming out of the States with existing home sales, the University of Michigan Sentiment Index, and export-import prices as well.
Yeah, okay, so it's not, a big bang in the US, but that University of Michigan Consumer Sentiment Survey is always really closely watched. Also, we've got the Fed's Goolsbee. I love that surname, Goolsbee speaking.
Austin Goolsbee, in fact. Yeah.
Next week, it's a big one here.
Well, yeah, it is, isn't it, Nadine? Because we've got the RBA board meeting, which of course gets underway on Monday, concludes on Tuesday, and we'll be right across that. In fact, our very own Juliet Sarley will be down asking those questions.
Yeah, but asking the good questions, Sean Callow, I'll have you know. But yeah, I get his point. We're not used to this here in Australia, and there were, of course, there's the gotcha. There's the gotcha crew.
I think we're moving on that.
Places like that.
Yeah. Look, also with the judo index there, that's becoming a very important read, actually, which a lot of people are looking at. And more broadly there, loan prime rates out of China, US retail sales. Interesting to see how they're holding up at the moment, more manufacturing data as well as some PMIs. And also got the Bank of England policy decision. Interesting, because of course we're heading into the UK election at the same time.
Yeah, and I was just reading on Reuters, Refinitiv, that there's, of course, Sunak would love to see an interest rate cut pre-election, but unlikely to happen. And also just because, we've got European markets open and London opening. Tesco has seen a quarterly sales rise, so it's kept and stuck by its profit guidance. So it's winning market share. That's a huge retailer in the UK and grocery retailer primarily.
All right, well, let's just take a look at where we have finished up then, as you can see.
No, finished down.
Finished up. The market
Down.
has been down.
Yeah.
You got me.
All right.
All right, yeah, 0.3% on the COB there.
Yeah, so for the week, 1.73%. As we look toward what could happen in the US, we've got E-minis, both S&P 500 and NASDAQ E-minis, looking mildly positive. But of course, a lot of water to go under the bridge between now and then, as we say.
All right, so until then, a big week ahead next week, of course. So enjoy the time off over the next couple of days.
We'll see you on Monday.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil,
Oh, hey, Ken.
here we go.
You're still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better.
Still fine with it.
Use your racket.
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it.
Yeah, he's definitely trying to hit you.
Fine with...
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.